are one of the things that really hold people back from investing. So we will say, I really didn't have money at the end. And it's true, they didn't have money at the end of the month. But it's because, one thing or another, when the money is in your account, there's a way it just flitters away and you don't even know how. So that's the third one. I think the fourth one that came to mind when you asked this question was lack of control. And I've dealt with this one personally because I speak to everybody about investing. So in my family, my usual way, if I meet you, 1-2 conversations, I've asked you how you're investing. Let me not lie to you. So I was talking to a few family members about investing, and 2 in particular who are entrepreneurs, they bounced me initially. They were like, I don't want a situation where I give you money. I don't know what you're doing with the money. I like to put my money in my business where I'm looking at it every day. Like I have control. I know even if I lose money in the business, I know exactly how it happened. Like, I'm in control. And it's completely understandable. And I feel like we'll talk about these more as we move along. But
yes, we will.
That lack of control is also something that I think holds people back, especially in Nigeria where we have many entrepreneurs. So I don't want to go on and on because, time and all of that. But that trust issue, your money just disappearing, is a big deal. No money is also a big deal. Then many of us who can have money, but somehow at the end of the month, there's where the money is just not there. That's number 3. And then there are people who genuinely they want to be in control of their destiny. Even if they lose that money, they want to be in control. And that's also a genuine issue. So for me, those 4 things are the things that hold many Nigerians back from investing, I would say, for sure.
Thank you so much, Laura. I think for me, what really resonated is the weak financial muscle. I'm not making this up. I was speaking to one of my clients one time, telling him that, whatever idle funds you have, just put it in your money market fund account. And I'm not kidding. I quote, he said, "My brother, no strength to add money." He literally said that. So definitely that weak financial muscle,
Yes. And the thing is that, fear makes us reactive, but smart investing makes us proactive. And that's what we're talking about here. Smart investing. If you let these fears hold you back, you'll just be reactive. There was no money. And it's like, you'll be surprised that there was no money at the end of the month. Like, you don't understand where the money went to. It happens to everybody.
Happens to everybody. Happens to everybody. Thank you so much, Laura. No, let's take it even further. I mean, so we have discussed why people are afraid of investing. Tutu, can you share more light as to the different types of fears or biases that affect investment decisions, like you and I, like the average guy on the streets, in Nigeria in particular, things that these biases Nigerians have created for themselves, e.g., village people, those kind of things. Can you share with us what you think?
Okay, well, thanks, Laura, for that feedback, and Miwa for this interesting question. If I was just to reframe what you just mentioned, you're just trying to say that what we're trying to do is to explore how fear, really, more than fact, hold people back from building wealth. I think that's the message we're trying to pass across here. And really, from where I sit, what's clear to me, Tutu, as a person, is that people are not really afraid of investing, right? It might sound not correct, but people are not afraid of investing. What they're afraid of is actually losing money, right? Is losing that money. So imagine you waking up like we do 9 to 5. I can remember when I used to live somewhere in Ikeja. Wake up at 5 o'clock in the morning, get to the office by 7:30. I don't get home till 10, 11. So imagine me getting paid at the end of the month. I finally get that paycheck and I put that money into an investment. And at the end of the day, I end up losing everything. It can be very devastating for anybody, regardless of your class. So this fear, really, of losing the money is what leads to people making very poor decisions, or even an inaction completely, whereby they decide not to do nothing. So the do nothing strategy, or they take very, very poor decisions, particularly if those decisions are driven by either panic, so they're scared, it's driven by maybe overconfidence, like you feel like you know it all, or something called the herd mentality, which I'll be explaining later, right? And I can definitely relate to this because when I lose money, right, the pain from losing money is huge than even when I gain money from the equivalent strategy. So the loss of that money is the reason why most people are scared of investing. So, but maybe on the bright side, right, the essence of this is trying to ensure that we can actually overcome this psychological force of fear.
Yeah,
And
yeah.
one way we can do that really is by educating ourselves. We can conquer this fear by just educating ourselves, right? We only fear what we don't understand. Once you understand something, you can actually take active steps to conquer that fear. So I'd just like to say, at least this webinar is a step in the right direction to conquer that fear. Now, I can also speak to some biases that people tend to fall, or traps that we fall into in the course of making some of these investment decisions. I mean, the first one I'll start with is something called the herd mentality, like I mentioned. And really, what does that mean? And please excuse me on the call. I'll try to be as layman as possible just to make it relatable for people that are not maybe familiar with investing. Now, herd mentality is saying that everyone is doing it, I have to do it. So this is not your social media trend or challenges where things are buzzing, where you just want to jump on the bandwagon like everybody else because somebody made money from crypto. I also want to do it as well because somebody made money from maybe another Ponzi scheme. I also want to make money from it as well. I would just like to cite an example. I know someone very, very close to me. I won't disclose the name. He's very thorough with investments and is into real estate. And unfortunately for him, with this whole Ponzi scheme, I don't want to mention the name, that happened recently in Lagos, he put quite a lot of money in there. And unfortunately, he lost everything. And it was really, really sad. And he came to me and said, Tutu, I'm never going to do anything investment. I'm just going to stick to what I know and what I understand. And I could relate to him, but I also know that that was because he made the wrong decision and he just jumped on the bandwagon. So what is herd mentality? Is doing something that you don't have a full understanding of. Is investments that you don't have fact sheet, historical performance, or the right financial advisors to guide you through. So that's one sort of bias and things that people tend to fall into when they're trying to make investment decisions. And the second one, I'd just like to just state very, very briefly, something called loss aversion. And what does that mean? It's like the point I stated earlier. I cannot afford to lose this money. I've paid all my bills. This little one left, I cannot afford to lose it. And because of that, most people decide, okay, I'm not going to do anything. I'm just not going to do anything because I don't want to lose it. I mean, I know a lot of people join our webinars over time, and I'm one that likes to preach about reading as regards financial freedom. Now, there's a particular book called Rich Dad, Poor Dad. I don't know if I have people in the audience that have actually read that book. It's a very, very good book.
I'm sure we have a host of people.
Yeah. So in that book, the author mentioned something around the fear of loss is a path to paralysis. What that just means is that if you are so scared of something, you don't want to embrace it, so you do nothing. And really, that is the wrong move. So take, for example, someone like maybe me, right? I get money every month from salary. Maybe I get about 300,000 as my salary every month. Now, because I'm scared after dealing with all my expenses, I decide that I'm not going to do anything, right? Because I don't want to lose that money. But that is the wrong way of looking at it, because by doing nothing, you are guaranteeing a loss position. And the question is why? Many of us know today that 300 a year ago is not 300 today. The purchasing power of that fund is not as strong as it was last year. So ways by which you can sort of overcome this sort of bias is by investing. So say, for example, you take maybe 20,000 of that salary or the remainder that you get every month and put it in the likes of a money market fund. That money could have earned you a good amount of return. Now, what is a money market fund for those that are not familiar with? This has nothing to do with the Ponzi scheme. These are called mutual funds, right? They are regulated by the Securities and Exchange Commission that invest in very simple government-backed securities like T-bills and investment with very credible banks. So the better thing I could have done, instead of holding on to this loss aversion, I don't want to lose anything, and leaving my money in a savings account where I'm earning 4 to 5%, is putting that money in a money market fund, which is also open-ended, right? Which means you can actually go in there and redeem those funds when you need it. I could have earned as high as 20%. Now, if you're not aware, money market fund, most of the credible ones have done as high as 20% this year. From the beginning of January till now, imagine if I had just taken that 20,000 and put it in a money market fund, I would have actually been able to hedge against inflation. So that's another bias that people tend to fall into. They don't want to lose money, so they do nothing. I could go on and on, Miwa, to be honest, in terms of some behavioral biases like being overconfident, the anchor bias, really recency bias, and maybe status quo bias. But I think I would like to hear from other members on the panel. So in other words, please try and ensure that you don't fall into these two that I've actually mentioned. And I guess we'll still be unpacking it as we move on in the course of this session. Thank you.
Thank you so much. So that was very comprehensive. And like I said, Even myself, speaking for myself, at some point in my life, I also had these biases. But I mean, based on knowledge, experience, I've been able to shed some of them off, with some of them, but we'll get there. We'll get there. Thank you so much once again. That being said, we've identified why Nigerians are afraid of investing. We've identified why or different biases that affect investment decisions. Now let's now come to how we can overcome these fears, right? I would love to hear from all of you. With Bola going first. Bola, how do you think the average guy, the guy that has one shop and is selling, I don't know, drugs and medication, he's doing his business is not doing bad, and he's not bothered about investing in any financial instruments because he's afraid that they will chop his money. How can that guy overcome that fear of investing?
So good afternoon, everyone. Thank you, Miwa, for doing so well thus far. So I think, for that kind of guy, one action point that can be implemented is starting small with investing. So much has been said by Laura with regards to, those, fear factors that typically hinders, Nigerians from embarking on the journey of investing. But I think if you want to sort of overcome that, you need to learn to start small. And I'm sure we're all familiar with the popular saying that Rome was not built in a day. So the same thing applies to investing. It is not a sprint, it is a marathon. So you've got to learn how to start small. Laura mentioned earlier that yes, lack of financial muscle is also a major constraint. But I think for an investor who is also sort of, incapacitated to a large extent in terms of how much you can commit to say you want to invest in, the money market fund. Again, by starting small with as little as 5,000 naira, you can actually start investing in a money market fund, which Tutu earlier described. So that's to make people realize that the journey of investing, you don't necessarily have to sort of liquidate all your investments, or some would say, oh, you need to probably sell your house, sell your properties for you to get onboarded with investing. But no, that's not the case I'm preaching here. I'm saying you can start very, very small. And the beauty about starting small is you're actually going to see how your investments will grow. And as your investments continue to grow, you get more confident with investing, and you can now begin to explore some, or should I say, more complicated or more complex investment structures. So if you start with a typical money market fund, which is highly regulated by Securities and Exchange Commission in Nigeria, and that fund invests typically in, money market instruments that are also backed by the federal government, treasury bills or commercial papers issued by corporates. These are very safe instruments that you're investing in, that the fund manager is investing on your behalf. So by investing in such simplified structures, you can also begin to have a better understanding as to how investments work, because you're able to track the performance of your investment over time. So that would give you some level of, understanding about how investments works, and you can now begin to diversify into, say, investing in stocks. To that extent, if you look at Nigeria's stock market today, it has done fantastically well. And on a year-to-date basis, the market is up by, over 35%. And if you take a look at some notable stocks in the market today, the names like GTCO, MTN, about, 2-3 years ago, MTN sold shares to investors at about 168 naira thereabout. Today, MTN is trading at about 490 naira. So the point is, you might look at the share prices of some of these names today and you are still contemplating, oh, these prices are too high. Dangote Cement at close to 500 for just 1 unit of share, MTN about 490 for 1 unit of share, GTCO at 200. So if that's all of these stock prices, you might think, oh, they are too expensive, I cannot start investing. But start small. I can remember when I started my career about maybe 6 years ago, I bought into all of these names at very cheap prices. So even a name like Fidelity, it was trading at about 2 naira, 3 naira. Today it's at over 20 naira. So the point is, you've got to start small. Don't see your financial muscle as a constraint as to why you shouldn't commence investing. Again, money market fund with as little as 5,000 naira, you can start investing in that fund. For equities investments, again, as you get equipped with the fundamentals of investing, you can then begin to explore, more complex, investing like, equities. Again, for forex trading, Cybex, I think, which, to a large extent, too shied away from mentioning. I think, again, lack of knowledge about some of these investment structures could have also contributed to why, some people are still scared of, embarking on investing today. So the point is, start small, have a firm, or begin to build your knowledge base about investing, and then you can begin to explore, more complex structures as you progress with your journey in investing.
Wow, I just have to quickly come in there. Oh, that was really interesting. So, from what I get from Golan, you can sort of think of this as swimming. Swimming is something that I'm embracing right now because I don't know how to do it. So it's like when you're starting that journey, right? You don't want to just jump straight into the deep end. You want to start from the shallow end and then gradually work yourself up. So I think that's what Golan is saying in terms of starting with low risk and slowly getting comfortable and building your confidence, right? Just to add to that Bola's point, for me, really, I'll just say it's really automate and remove emotions, right? Ideally, what you want to do as an individual to instill discipline is to automate the behaviors that you want to repeat. If you want to repeat something, you need to automate it, right? Just the way we always make budget for Netflix and maybe taking our boo to the cinema and things like that, it's also quite clear that if you automate and make investments something that is done on a regular basis, you can actually benefit from that, right? And what this also tends to do is actually remove that fatigue of having to think, oh, where should I put the money now? Or something just came up, somebody just called that they need help. Because it's automated, you are able to strip out any emotions and stay disciplined to that particular strategy. So that's one way, I think, in addition of just starting slow, that I feel like we can overcome some of this bias. Another one I can just quickly add is really education, right? I also mentioned earlier that if you understand something, you can't be afraid of it, right? If you understand something, you would embrace it, right? And really fear really fades with knowledge. So the more we educate ourselves around this product, just the way Bolaon mentioned, the more comfortable you get with it, particularly if you have the right financial advisors to guide you as well and provide information that you need to ensure that you're invested with the right investment that suits your objective and your risk tolerance level. So those are the 2 points I just wanted to add. Automate and remove emotion. So once you get that salary, take the time out after this particular webinar to go to the bank and automate transfers into either money market funds, and also ensure that you also attend webinars. So instead of following everybody on TikTok and Instagram, try and also follow people that are into finance and financial education. I found out personally, I'm a YouTuber. I don't do Netflix. On YouTube, the wealth of knowledge there is so immense. You can actually learn so much by dedicating 15 to 20 minutes on finance. And that has really worked for me as well. So I just wanted to share those 2 points. Thank you. I don't know if Laura has anything to add.
Thanks so much, Tutu. I think Laura also has something to say.
I don't have anything to add per se, but really just to make the point about the education. And I say it because, like when Tutu said, automate your investments, remove emotions. You have to do some research first so that when you are automating, you're saying, I'm going to set up maybe 3 or 4 direct debits into ABCD. Because you've done the research already, because you understand, it's easy to make those choices. The truth of the matter is that sometimes people feel as if investments are gate kept, or like opportunities are only meant for some people, only for the wealthy, only for, but that's not true. And I think that's why we're here, to be honest, to disabuse everybody of that notion that it's not meant for the wealthy, it's not meant for a select group of people. And that's why both GB and Tutu have preached the gospel of like investing from 5,000 naira, 5K. I feel like 5K is money that it's not we can all afford 5,000 naira. 5K monthly, 10K monthly, 20K monthly. Challenge yourself. And just that challenging yourself, we talked about that financial muscle. Challenge yourself. So when you combine education, automation, starting small, challenge yourself, guys, millionaires, billionaires in the making. That's where we are. So you can have like, how much is money kind of money. That's where we're going.
True, because even the millionaires, they start from somewhere.
Yeah, I
They
mean,
all started
talking
from
about
somewhere.
educating yourself, right? I mean, sorry to cut you, Miwa. I think, I mean, we're in a digital age now, so I think access to information is widely available for those who have
Probably.
keen interest in understanding investment. So we've talked about our money market fund. You can go to our website, you'd find our fact sheet, which is something that is disseminated on a monthly basis. So that fact sheet would give you broad information about our various products that we offer to different categories of investors, either investors who invest in Naira-based investments or investors who invest in USD-based investments or even ethical-based investments. So by accessing that fact sheet on a monthly basis, again, you begin to develop your knowledge base about different investment products. So that fact sheet, I think it's also a key takeaway point for, I mean, those on this webinar today to just help you to begin to develop your understanding about investment, even the economy and the financial markets as a whole. So by looking at that fact sheet on a monthly basis, if there's any term that is not clear to you, you can just punch it, I mean, on Google, if it's treasury bills or commercial paper, these technical jargons we've mentioned at this webinar. So you can just punch it, I mean, on Google and you begin to understand, I mean, those technical jargons that we've mentioned at this webinar. So over to you,
Thank you
Miwa.
so much. Thank you so much. I mean, thank you guys. Thank you so much. I mean, in addition to that, I mean, in terms of knowledge and education, that's why we're here. After asset management, we have relationship managers that are ready to handhold you through the process, right? In terms of setting your own personal financial goals, identifying your objectives, and putting you in the appropriate buckets in terms of investing. As my colleagues have already mentioned, we have investments that cater to different stratas of life, different risk profiles, and different objectives. From the money markets to the smart beta fund. We'll get more into that. Let me not spill all the beans now. But I mean, thank you guys so much. Taking it from there, I mean, now we've spoken about how people like you and I can overcome investing. Can you share some insights as to smart investment principles people can key into from today? Like once this webinar is over, let them just start imbibing these principles. Bola, do you want to go on that?
Yeah, so firstly, I'll start by saying diversification. So, I mean, today people tend to just, when they want to start, I mean, the journey of investing, just concentrate everything in one single investment outlet because they're probably very confident or they have good knowledge about that investment outlet. But I think it's also important to diversify, I mean, your investment. So in Nigeria today, people make financial plans and at the end of the day, they are unable to achieve those, I mean, financial goals they have set for themselves. And one reason for this is perhaps because their investments are not diversified enough. And I would speak to investment diversification from two broad angles. One is within, I mean, as far as investments are concerned, one is diversifying across asset classes. Then
Right?
secondly is within asset classes themselves, also try to
Very important.
diversify across currencies. So I think the second part is more relatable to Nigerians, and I would like to start off with that. So if you look at, I mean, the exchange rate Naira to the dollar over the past 10 years, I mean, let me not even take us too far. Let's
3
take
years.
our minds back to 2020, shortly before the onset of the pandemic, sometimes in January or February. Naira to dollar exchange rate was roughly around 365, 363 to 365 Naira to a dollar. And at that time, if you wanted to buy a Toyota Camry, popularly referred to as Muscle in Nigeria today, with a sum of 2 million or 2.5 million, you'll be able to afford that vehicle. But if you look at the current market value for a second-hand branded version of that vehicle today, it is being sold for as high as, I mean, 9 to 10 million. In
Wow.
dollar terms, the value or the price of that vehicle has not increased materially. But the only reason why the price has gone up is simply due to the fact that Naira has weakened significantly compared to the dollar. I mean, 2020, we are at about 363. Today, the currency has depreciated by over 5 folds to over 1,500. So for someone who had a plan at the time to acquire a Toyota Camry, today you're unable to acquire that vehicle, not because, I mean, you are not saving or you are not investing, but it's probably due to the fact that the savings you were setting aside, you didn't diversify into other currencies. And that's why I'm emphasizing on the need to not
Yeah.
just concentrate your savings. Tutu has mentioned automating your savings, setting aside a specified amount on a monthly basis into an investment outlet. It can be the money market fund, but it's also important for you to understand the importance of also diversifying. And that's why I'm placing emphasis on diversifying across currencies. So ensuring that your investments are not just concentrated in Naira alone. That would give you, two major benefits. One is it would serve as an edge against currency depreciation or devaluation. So you're able to sort of withstand the negative impact of adverse movement in the currency. So if you probably converted your naira to dollar at 365 in 2020, today you're going to reap gains from two broad angles. One is the dollar value of your investment has increased. Then secondly, if you decide to now convert the dollar amount or your current value of your investment in dollar terms to naira, you're also going to reap the impact of the exchange rate movement. So that's, the benefit you stand to derive from what diversifying across currencies. So that's the second point I mentioned. The first point is diversifying across different asset classes. So we've mentioned, the money market fund, which is a purely money market fund, instrument that invests in, short-term money market instruments. But as you keep your knowledge about investing, you can then begin to explore more risky investments or higher risk investments like equity. So you start by investing in a mutual fund, the smart beta equity fund, or